What really takes the emotions out of your trading is knowing what should not or should happen based upon the indicators that go along with candlestick reversal signals. We saw the spinning top doji type day, Harami, right smack dab off the 200. When it gapped up, it was confirming that that's where the reversal had occurred. It gapped up again through the T line, pulled back, did some profit taking. It didn't do a sell signal and a close below the T line. It just closed below the T line. However, with the stochastics coming up, these are all things that you can visually see in one instantaneous glance, that you had strong buy signals, a pullback that didn't have a reversal signal, and then a trend kicker signal where it opened here and closed here and then gapped up and went the opposite direction above the previous day's open, indicating still strong bullish sentiment. Today, after it opened positive, notice the thing that occurred at the low today. It hit smack dab off the T line. And this is what we've been illustrating is nobody has the T line on their chart. The T line acts like a natural support and resistance level of human nature. When you apply that to the graphics of candlesticks, you've got a very powerful combination showing you what's happening in investor sentiment and the T line acting as a natural support and resistance level of human nature. When you combine those two, you've got very clear analysis of what's going on in investor sentiment. So today, when the Dow came back and bounced back up off the T line, that told us they weren't selling it off. That was just profit taking or consolidation. Same scenario for the NASDAQ. Morningstar signal with a gap up from a doji type day. It traded lower today and then came back up. So what's the qualifier? They still haven't been able to close below the T line. Stochastics heading up. Looking at that, with adding up the criteria that you've had a strong reversal signal, stochastics heading up, and you're still trading above the T line, just produces higher probabilities that the uptrend remains in progress until you see a sell signal and a close back below the T line. Some of our option recommendations are based upon the strength of a reversal signal. This is what we call a bullish flutter kicker signal. Bearish candle. The next day they gap it up and did a doji. Here's a very simple rule of the doji. Prices are usually going to move in the direction how they opened after a doji. The positive open the next day, even though it was up significantly, is telling you there is very powerful bullish sentiment in this reversal. We could be buying without that hesitancy of, oh boy, it's gapping up. Should we wait for it to pull back? No, we're looking to buy on positive trading. What's happened after that? You've got a 45-degree, a strong steady eddy to the upside. This signal alone tells us immediately there is an extremely strong reversal in investor sentiment. Expect more upside. Identifying any strong reversal signal, such as that doji gap up, our best friend signal, produces an extremely high probability that there's going to be a uptrend, a strong uptrend. The two major benefits of a doji gap up, your best friend, they call it a best friend because not only is the probabilities of an uptrend extremely strong, but the magnitude or the strength of that uptrend is extremely strong. If this opens positive tomorrow, especially if it opens up above today's open, your first likely target is the 50-day moving average. With that information in mind, that makes establishing spreads very simple. You can be buying the 270, selling the 280. You can buy the 267.50, selling the 277.50. Because candlestick analysis provides a visual identification of a strong reversal signal and the visual targets that everybody else is watching, you can put on trades with a high degree of probability that it's moving in the right direction, and then you can pick out the best option trades to take advantage of that trade situation. The graphics of candlestick analysis is clear based upon the signal formations: a breakout, a 45-degree, a J-hook pattern with a morning star signal, giving us a very simple entry. If it opens positive, you can start buying immediately because that tells us this little congestion area is now breaking out into the next wave to the upside. The major benefit of candlestick analysis is that the graphics tell us exactly what's going on in human nature, and the identifiable patterns are what put us in situations where the probabilities of being in the right trade at the right time are constantly in our favor. That'll be it. We'll see you in the chat rooms.